Hey, what's going on everyone? My name is Aaron. In today's video, we'll be talking about the current cryptocurrency sell-off. We'll be talking about some reasons behind the crash and some predictions going forward. If you enjoyed the content, please leave a like on the video, subscribe to the channel, and let's get right into it. Okay, so over these past few weeks, we've had a pretty drastic pullback within the crypto markets. We've had Bitcoin dropping 30%, Ethereum dropping almost 20%, and even Dogecoin falling 35% off of its previous all-time high. Now, when it comes to crashes within the crypto space, it's important to always look at the various catalysts and the various factors that underlie these different crashes. Okay, so starting off, we have to talk about Elon Musk. So as we mentioned in our last video, Elon Musk recently appeared in Saturday Night Live. Now, in his SNL appearance, that really led to the beginning of the downfall that we're seeing within the crypto markets, specifically with Dogecoin. So as we mentioned in our last video, there's a lot of momentum and a lot of speculation going into SNL that Dogecoin would be hyped up and hit $1. But in reality, the exact opposite happened, leading Dogecoin to sell off during the show and the price to fall down with it. However, there's another thing Elon Musk said, and it's a tweet that came out a couple days later that really shocked the entire cryptocurrency market. So if you haven't seen this tweet, Elon Musk basically said that Tesla would stop buying Bitcoin and it would stop accepting Bitcoin as a form of payment for Tesla vehicles. Now, this is a pretty big deal considering Tesla was one of the first companies to publicly announce that they were owning Bitcoin and buying it for their balance sheet. They're also the first car company to accept Bitcoin as a form of payment for their vehicles. Now, specifically, Elon Musk mentioned the environmental impact of Bitcoin, and he said that Tesla would be looking into other cryptocurrencies that don't have as harmful of an environmental impact that Bitcoin does. Now, in case you're confused about what the environmental impact of a digital currency even means, in order for a cryptocurrency such as Bitcoin or Ethereum or any other digital currency to exist, you need what's called miners. Now, miners are just people who have computers, and these computers run the code and run the software of Bitcoin. And in doing so, they are essentially validating and securing transactions on the network. However, these computers which are running and securing the Bitcoin network need energy, and the more computers you have, the more energy you're going to need to run the computers. And the problem here, and the problem that Elon Musk pointed out, is that most of the Bitcoin mining is done in China. And the problem with China is that China is the world's leading consumer of coal. And coal, as we know, is bad for the environment. So what we really have are a lot of these Bitcoin mining operations that are being powered by coal consumption and coal production when it comes to energy. Now, this is a problem, especially if you're a company like Tesla, right, whose initiative is all about green, clean energy, yet you're buying Bitcoin, which is coming from these very dirty forms of energy production, like coal from China. Now, the exact specifics about just how much Bitcoin is mined using coal versus renewable and clean energy, the specifics there aren't really as clear as many people claim, but the important point here is that Elon Musk brought up a valid argument that has really shocked most of the market. And that initial shock is what's led a lot of these coins to sell off and resulting in the low prices that we see right now. Okay, so now we have to analyze the situation. We have to ask ourselves, is this argument that Elon Musk is bringing up when it comes to the environmental impact of Bitcoin, is this going to be the downfall of the coin, or is this just a little blip on the overall long-term chart? So the first thing to understand about this short-term crash is that crashes are healthy for markets. Whether it's stock markets, crypto, whatever, short-term crashes are actually healthy. Especially with Bitcoin, these past couple months, we've seen a dramatic rise in the price of different currencies. Remember, when prices for assets rise, those assets actually become more risky as holders are more and more incentivized to sell as we get these loftier and loftier price valuations that are more and more detached from reality. People want to sell as the price rises. However, on the other hand, as asset prices fall, they actually become less risky for investors. Now, obviously, as an investor, nobody wants to see markets fall because it means that you're losing money. But you have to remember that as markets fall, you're going to get to a point where people are going to be incentivized to buy back into the currency because prices have fallen so much. So in other words, you'll have this short-term selling down until you get to a point where the price is so attractive that people then want to buy back into the currency because it's already sold down so much. And now again, we have to remember we're still in a long-term bull market for the whole cryptocurrency space. And a hallmark of bull markets is you have a lot of new investors entering the space. So with the introduction of new money and new investors, you have two things. A, these new investors aren't used to the price volatility of the cryptocurrency space. And B, a lot of these new money and a lot of this new investors don't necessarily even know the different currencies that they own and don't really know what they're even buying into. So when you have both of these factors combined with, some bad news and a little bit of price action to the downside, you have a lot of these new money investors actually getting scared out and being more inclined to sell their currencies because they don't really know what they're owning at the end of the day. And when you have a lot of new money selling off, all it does is further exacerbate and provide more downward pressure on the markets, causing it to sell off even more. So at the end of the day, despite this crypto crash that we're in right now, the actual fundamentals of these coins haven't necessarily changed at all. We haven't had some black swan event where maybe there's a major hack on a cryptocurrency network, or maybe the SEC comes out and totally bans cryptos. We haven't had anything like that to validate and justify such a correction. So as a result, we should use this short-term sell-off as a buying opportunity to buy into our highest conviction coins that are now at cheaper prices. I want to thank you for sticking through today's video. Please go ahead and leave a like, subscribe to the channel, and I'll see you in the next one.
Yeah.